All right. Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Dhruv Patel. Dhruv, how are you today?
Good. How are you, Tim? Thanks for having me on.
I'm doing well. A little bit about your background. You're the co-founder and CEO of Arch Lending. Before starting Arch, you were at Brex and Bridgewater Associates, so some fintech and financial services background. You have degrees in computer science and business administration from the University of California, Berkeley. So with that kind of background, can you kind of take us through some finer points that I may have missed and also tell us about your maybe personal journey to Bitcoin?
Yeah. So my journey with Bitcoin started in college, like when I was at Berkeley in 2017. That was like my senior year. Many folks at that point in time were starting to play around with like blockchain, get really deeper into Bitcoin and understand what that's about. And so that was really the first time I got exposed there. Around the same time, being in the Bay Area, we saw companies like Coinbase come and get up and running. They were giving out promotions. If you buy your first Bitcoin, or your first like Bitcoin purchase, you get X amount of free. And so just as a college student, downloading those, playing around with it, that was when I first started. And then from there, I went to work at Bridgewater, which was a hedge fund. They traded everything except Bitcoin. There were more equities, bonds, etc. But Bitcoin was always interesting, just given the volatility it had, how the price was running up. And during my time there, I think it went from 3,000 to like the 20,000 range and then like all the way back down. And so it had always been in the back of my mind. Those were the first two times I would say I really got exposed to it. And then from there onwards, just started digging in, building up like exposure to Bitcoin and just understanding what it's all about.
So in that time period, like college, early career, were there friends of yours that also bought Bitcoin? Was there like conversation about it? Or were you like kind of the lone ranger where like no one could have cared less? Or was it a mix as far as like in real life sort of connection points with people and conversations around Bitcoin?
Yeah, I would say like I wasn't even as far on the spectrum of weirdness here. Like there was people that were mining from the dorm rooms and things of that sort. We didn't really have a big community, but I was more so just always curious about what it is and wanting to learn about it. There were certainly people that were further down the rabbit hole than myself at that point in time, but we were just trying to learn whatever we could from the few online resources there was at the time. I think now yourself and others are doing such good work just making people more aware and helping sort of democratize the access to this knowledge. But back then, as we were talking about before this, you kind of just had to search around and do the work yourself.
Sure. Can you take us from the Bridgewater days through the journey to Arch?
Yeah. So from there, I went and worked at Brex. I joined them as an early employee. They were a fintech startup doing financial services for startups.
Okay.
And during my time there, as I mentioned, was investing in Bitcoin. I had equity in the startup. And as I was looking around for sort of like financial product from a bank, I went to them. They naively were like, okay, show me your assets. And I would show them Bitcoin equity in a pre-IPO startup. And they were like, whoa, what is this? And just marked it all as zero. Yeah. And that was the first time I started realizing, look, there's a lot of assets outside of just what banks may consider creditworthiness. Bitcoin was one of them. And it really didn't make sense to me why they wouldn't. It's liquid, you trades 24/7. It had all these characteristics, like you could transfer ownership of it or collateral was easy during the time of the loan. And that was really what opened our eyes to Arch. And so myself and my co-founder started it just over 3 years ago. And our focus area has been to build a wealth management like private banking platform for investors of digital assets like Bitcoin.
Can you give us a little behind the curtain, or however you would say it, as to like the conversations when you were just getting Arch up and going and you're like, hey, here's what we're doing and here's why you should work with us from a like capital backing standpoint?
Yeah.
Were there several conversations where they just kind of laughed at you, or was it like an educational thing, or is it just kind of finding the right fit and just like, you have 10 meetings and one of them might be someone that would actually understand the pristine collateral with volatility kind of aspect.
Yeah, I wish it was that easy. In a weird way, it still isn't that easy. Even though Bitcoin has evolved so much, there's ETFs and all of this stuff. But when we first started, our first year was kind of a slog just because every other month somebody was going bankrupt, and it culminated with FTX. And so as a result, so many institutions that we would look for as a non-bank lender, your banks, your credit funds, your hedge funds, were all pulling away from the space and saying, look, let me just pause, reassess if I even want exposure to this asset class, and how I want to sort of participate here. That being said, we ended up raising a CLO facility, which was led by Galaxy Digital. We started with $70 million, and that's since been increased by a multiple. But those conversations were really better in terms of more lenders after the ETF approvals were starting to understand, look, I can wrap my head around what lending against Bitcoin might look like because I understand what lending against stocks look like. And Bitcoin is sort of better than that because it trades 24/7. You can mark to market any given point in time. It's very liquid. And so those conversations started to shift. I'd say now we're at a point where with Cantor announcing they're coming in, Goldman Sachs, I think, has made a recent announcement about wanting to participate in the lending space. More and more institutions will follow. And so I think it'll actually just become easier from now onwards.
And can you explain for the audience what a CLO facility is?
Yeah, so it stands for a collateralized loan obligation. It's essentially a way for non-bank lenders like us to facilitate these loans. And so what happens is when we lend out, we have to get our capital from elsewhere. Mm-hmm. And so we draw on these structures saying, look, we've made a couple $1 million worth of loans. Can we receive the debt for those loans? And then we lend it out. Our business model as a company is taking the spread in between. So what our borrowers pay us versus what we pay our net lenders.
Got it. What's your mental model and approach to the buy and borrow? Some people say buy, borrow, die.
Yeah.
But I like to try to not use the last words, maybe like buy and borrow through the generations. And how would you think about it from okay, I need to accumulate this asset so I can use it as collateral? Like, what's the minimum amount to work with you guys? And yeah, just if you can take us through how you think about buying and borrowing and kind of never selling your assets similar to real estate or something else.
Yeah, I think that's sort of like the lens I look at it, which is the goal is to maybe accumulate assets, and you can spend in fiat for regular day-to-day purchases, but really your focus needs to be, or you should be looking at it of how can I continue to build up an asset base? And so as a result, oftentimes you see this in the private banking world where the ultra wealthy have access to these types of products, but they will just go to the bank and say, look, I want to buy a house. I don't have the cash for it maybe right now, but I also don't want to sell any of my assets. So what can I do? And they'll just get a line of credit against their stocks or against any other, like their real estate, their art, things of that sort, and use that to make these purchases. And so that translates very nicely over to Bitcoin, where you still have maybe want to buy a real estate, want to sort of have a wedding expense, or you just come up with natural other expenses that have happened in your life, but you don't want to sell this asset, especially when it's been appreciating 60+% on average over a year. The easier thing to do is let me borrow against that, handle these expenses. And as a result, I can continue to appreciate the upside of the Bitcoin.
Got it. Hey guys, this episode is brought to you by Onramp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. Onramp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. Onramp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the Onramp team. Go to www.onrampbitcoin.com. All of this is kind of works because, as you said, Bitcoin's appreciating at 50, 60% a year. the interest rate is obviously below that to
Yep.
borrow against your Bitcoin. And I was listening to one of the other interviews you recently did where you were speaking to, as you kind of build up your base of business, book of business, that like the current interest rate you're charging would come down maybe slowly over time. Can you speak to some of that at all?
Yeah, that's right. So essentially, we're always working to lower the interest rates that we offer to our end borrowers. And there's really, I would say, two different aspects of this that come into play. One is as we just continue to scale as a business. When we started, we were a smaller company. As you mature, have more years in operations, have more scale, you can bring that cost down. But the second is as we naturally add other lenders to the mix. And so we're talking with some of the larger like banks, some of the larger funds that manage insurance pockets of capital. And so as these folks start to allocate more towards giving us debt via our CLO, what that means is we've reduced our own costs and we can then pass that on to our customers. And so I think over the course of this year, we're looking to really reduce our costs down at least a couple of percentage points.
And maybe there's not like publicly available flagship names yet, but I know from some of our conversations that there's individuals, but also maybe Bitcoin mining companies, other corporates, other Bitcoin Treasury, sort of corporates that you work with, that you have as clients. Can you speak to kind of the range from an individual borrower all the way up to private business, maybe even a public company or a public miner or whoever you have as clients, to kind of give an idea and some color behind that?
Yeah, definitely. And I think this also touches on a question you asked earlier that we didn't get to, which is like, what is the minimum size you would think about when borrowing against your Bitcoin? So on the individual side, we have a sort of range of borrowers. We have some borrowers that are borrowing $5,000, $10,000. We also have individuals that have $5 million plus in terms of their loan size with us. And then also on the businesses side, it's actually quite interesting the range of businesses that have Bitcoin on their balance sheet. We have a lot of private SMEs that could be, irrigation companies, could be staffing companies that have Bitcoin. They borrow in order to maybe expand their business or pay for, additional expenses that they have coming up in a single quarter. We also have Bitcoin miners. And then lastly, a few public companies as well that are doing the Bitcoin sort of treasury approach, where their goal is really to accumulate as much Bitcoin as they can, and taking leverage against their Bitcoin is in a responsible manner allows them to achieve their outcome even faster.
And can you explain what an SME is for the audience?
Yeah, it's basically a small and medium-sized enterprise or a small and medium-sized business. So you can think of it as, your mom and pop shops to maybe a small consulting business or a small irrigation business. These are the types of companies that we're also seeing that have Bitcoin on their books.
Can you kind of walk us through the top couple questions that you get most often that you think might be helpful for everyone to hear, along with, if it's part of that bucket or separately, like some of the like rational but kind of questions that you don't expect to hear, but you've gotten and you're like, no, it actually is a really great question. And if any of that is kind of caused you guys to kind of innovate or think about things in any sort of different way?
Yeah, definitely. So I would say the key things to think through when you're evaluating borrowing against your Bitcoin, one is what happens with your Bitcoin, right? And so for us, it's very clear we don't rehypothecate assets. The second is, where is that Bitcoin actually held? You want to typically say, okay, we hold it at qualified custodians or highly regulated businesses. And so as a result, you don't have any risk of losing your Bitcoin. And then I'd say the third is understanding the terms of the loan. And so typically these loans have a margin call. They have a certain threshold where you might partially liquidate some of the Bitcoin to help pay down the loan. And all of this really comes because there's no credit checks involved with these loans. The only collateral is your Bitcoin. And so as a result, you really, if you were the borrower, want to understand, okay, what happens at what scenarios of the Bitcoin price, right? Like if Bitcoin price drops to whatever $1,000 range, what happens? Do I need to top up additional collateral? How long do I have? Really, you want to understand that whole process end to end, because the goal for you borrowing is to keep your Bitcoin. And so that's the biggest thing. In terms of the questions that we had got asked that maybe we weren't anticipating in the beginning was, okay, we had a lot of folks borrow maybe when Bitcoin was around $30,000, and the price really has run up since then. And now they're sitting there saying, look, the value of my collateral is much higher. Can I just increase the size of my loan? And when we started, we were just offering term loans, and they were mostly static. Once you take out the loan, you are all good. If you want to access additional cash, you would take out a second loan. But what that really caused us to do was step back and think, okay, this is an asset that will continue to appreciate. We should allow our product to function more like a line of credit. Mm-hmm. And so that's what we re-engineered on our side, saying, as Bitcoin goes up, you can just click 3 buttons on our dashboard and access additional cash. And so really those types of questions helped us re-engineer our product for the better.
Got it. Can you talk about the partnership with Arch? How did that develop? Did you guys just meet each other randomly at an event, or how does all of that work?
Yeah, I think you're referencing the partnership with Onramp, right?
Yes, with Onramp.
Yeah. So we first met Onramp, I want to say 2 years ago, maybe at Bitcoin Investor Day, 2 years ago.
Okay.
And there we just we started talking about what they were working on, what we were doing, and then I think we sort of didn't have much contact over the course of the next year and a half, where we were independently building out our products and so were they. And I can't recall the exact factor that led to this sort of collaboration here, but we knew we had a mutually overlapping customer base, meaning our customers are sort of holding Bitcoin for the long term. And so naturally having a custodial solution like what Onramp offers makes sense and is something that's interesting to them. And similarly, Onramp has a client base that has a lot of Bitcoin and is holding it for the long term, but does need to access liquidity against it. And so being able to draw down cash for borrowing purposes was really, really beneficial. And we've seen that partnership over the last month become really fruitful on both ways.
The Bitcoin for Corporations Conference is coming to Orlando May 6th and 7th. Receive 20% off admission by going to microstrategy.com, selecting Bitcoin for Corporations, and using discount code KOTZ at checkout, and I'll see you there. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Where do you see all of this going as far as the customer base? Do you think you'll see more growth on the corporate side, on the individual side? Is it all just kind of all ships rising together where you don't really see corporates outpacing individuals, although we see a lot of at least rumblings about additional major corporate adoption of the Bitcoin Treasury strategy. Based on everything so far, do you see any trends there in either direction?
Yeah, I think what you said roughly is how I see it, which is sort of everyone rising together here as adoption just continues. We see individuals continuing to participate here and increase Bitcoin allocation. We see institutions doing that in a really big way. But also the story is Bitcoin as an asset class, when you compare it to real estate or others, has drastically less borrowing percentages against it relative when you look at it. And I think part of it is an education thing. People aren't aware that they can borrow against their Bitcoin or how specifically these products function. And so all three of these things will, I think, help continue the adoption across both individuals and businesses. I'm actually curious, Tim, what do you see on your side in terms of, at least with corporations, what are the types of companies that you've been seeing or think will continue to add Bitcoin to the balance sheet?
I've seen private companies definitely wanting to have the custody situation conversation.
Yep.
And the not so much on the lending yet, but probably because I haven't asked that question. So I'm sure they would like that solution.
Yeah.
And I think you probably have to be really close to the situation to really know which publics are considering the strategy. So I haven't seen as much there, but just the reality of one of my friends yesterday actually said, Tim, because I was trying to kind of flesh out in my mind private companies versus public companies. And they said, there's a lot of very large companies that are private companies.
That's right.
And I'm like, a lot of them. So it's something where I think the public companies get a lot of the kind of the spotlight, whereas, there may be not household names that are private companies and private companies that are household names that when you see them doing the strategy, and then, also private companies that are going to flip public and do the Bitcoin Treasury strategy. I think that will probably also come across the newswire as noteworthy. But definitely have seen and had some conversations with private companies. And I'll be intrigued to see as maybe the price runs up if the individuals, maybe from a ratio perspective of like loan to value, if they get more antsy to want to find a lending solution and really do that research because of seeing all of the FTXs of the world and just maybe wanting to go slowly and dip a toe in. Can you speak to that at all about, I guess, with the loan and then line of credit sort of feature, someone could just kind of do a smaller amount and kind of like get comfortability and build trust and all of those things just because they may just not know.
Yeah, exactly. And that's what we see some individuals or even businesses do, which is start with a smaller loan than what you actually need to really test the product, see how it works. With us, you can get on a call with people on the team. You can message us on our website. And so we're really accessible and provide that white glove client service experience. But really, it allows people to then start, understand the process, see that the cash hits their account, see that their collateral is held safely. And as they continue to get comfortable with us, increase the amount that they want to borrow.
How do you think through if the volatility of Bitcoin decreases, would the loan to value therefore increase at some point? Or how do you guys kind of think through that?
Yeah, so I think that's natural, right? Loan to value is basically set because you want to assume some buffer based on historic price volatility, saying, look, if there is a drawdown of X%, I want to make sure, one, my clients have enough time to deposit additional collateral, and two, that as the lender, you can still be made whole and have enough safeguards in place. So as you start to see volatility decrease, I think it makes sense that you should be able to then increase your LTVs, given you know that you can still have the same sort of buffer as a lender.
Got it. And where are the best places for people to kind of go do their own research, check out where you're discoverable, whether it's a website or X or YouTube or elsewhere?
Yeah, I think we're pretty active. One, on our website, if you just go to archlending.com, you can message us, book a call with us directly there. On X, we're at Arch Lending. Those are probably the two primary places to contact us, and we're extremely responsive across both of them.
Awesome. Any final thoughts?
No, I think those were the main things. I maybe had one final question for you.
Sure.
Curious, when you see businesses putting Bitcoin on their sort of balance sheet, do you typically see companies start with putting a portion of their profits, or are they mainly taking on debt to then buy Bitcoin? How have you seen it most commonly approached?
So, of course, with strategy, we saw them use their existing cash. But from the conversations that I'm hearing, it's raising a tranche of money to kind of start off with a splash of like, hey, we did this, at least for companies that want to kind of be in the public spotlight and say, hell, we have $100 million of Bitcoin.
Yep.
So yeah, I think that's probably been the rule. And then, I think you've seen one or two publics so far put a smaller amount on to start, but again, kind of not really disclose the amounts until they have something that is at least like a decent starting point that they can build on.
Yeah.
So, yeah. Probably a combination to answer the question.
Okay, awesome.
Yeah. Well, Dhruv, thank you so much for your time today. Super appreciate you coming in.
Yeah, I'm glad we were able to make this happen. Thanks, Tim.